Hello tất cả mọi người. Chào mọi người đã có thời gian trở lại đây. Hy vọng rằng cái giờ này internet nó getting better. Ok. Rất là hân hạnh được doing something với cái thị trường này. Bây giờ đó là cũng là ngay cái thời điểm mà chuẩn bị để mà Fed decision hay là những cái sự quyết định của Federal, đại khái là trong vài phút nữa đây. Tôi nghĩ khoảng có 10 phút 15 phút gì đó, 10 phút 15 phút thì nó sẽ có cái action nó sẽ coming. Cũng như là chúng tôi đã đây tôi làm cái này như là chưa có làm xong cái system microphone thôi. Cái giờ này là cái giờ nó đang action mà không biết cái connection của anh em có chuẩn hay không. Còn nếu không thì nó bắt đầu nó acting up nữa rồi đó. Thì anyway, tôi cái việc nói tới đâu hay tới đó đi. Đại khái là quý vị có thể coi được cái gì thì coi, sắp xếp được cái gì sắp xếp cái giờ này. Đại khái là hôm nay là mình chỉ monitor cái upside với downside của cái thị trường thôi, rồi nó cũng sẽ shadow một cái con số mà nó nhất định. Thì cái điều đó nó cuối cùng cũng phải shadow thôi. Thì đại khái con số mà mình đang tìm đến nó shadow đó là một cái action nó tốt cho thị trường nói chung. Thì đại khái là cái data nó là như vậy, cho nên quý vị cứ tàn mà coi. Ok. Hy vọng rằng nó không có giật quá, nhưng mà đủ để mà nghe cái tiếng nói của tôi thì cũng đỡ rồi nha. Hy vọng rằng cái âm thanh thì ok, cái video thì nó hơi bad chút xíu. Ok, bây giờ hồi sáng nay đó thì có cái clip video, nó là cái IPO hồi sáng hôm nay. Thì thật sự ra đó thì cái thằng này đó nó cũng là một cái thằng mà cái là free ride cái artificial intelligence. Cái chuyện mà quảng cáo mà automate, mà advertisement với marketing á, cái chuyện đó nó không có gì mà lạ quý vị. Nó có từ một thập niên trước rồi. Bây giờ nó đang xài những cái thứ đồ của thập niên trước trở lại thôi. Mà cái chuyện chữ AI nó ra cái AI cũng không đúng nữa. Tại mấy cái automate system này đó, mình nhìn giống như là AI nhưng mà thật sự nó là automate. Nó không có một cái chất xám hay là một cái sự quyết định trong mỗi cái transaction. Cái gì mà nó tự động, nó repetitive, tức là ví dụ 1 cộng 1 là 2, 2 cộng 2 là 4. Nó là formulate, nó là formula, nó là tự động rồi. Nó không phải là một cái decision making process. Nó là một cái bảng có sẵn rồi, giống như là bảng toán nhơn vậy. 5 lần 1 là 5, 5 lần 2 là 10, đại khái như vậy. Thì những cái đó nó không có thuộc về cái AI hay là artificial intelligence hay là trí tuệ nhân tạo. Nó thuộc về cái dạng là automate computation. Nó giống như là con chip, cái programming như con chip rồi. Cho nên mình không thể nào mình thấy tất cả những cái process hay là những cái tiến trình mà về ở ngoài kia mà nó tự động đó, nó tự chạy hay là nó tự động thì mình gọi nó là trí tuệ nhân tạo. Quý vị thấy không bao giờ có chuyện đó. Nhưng mà thường tôi nó thích làm như vậy. Tôi nó thích gọi rằng trí tuệ nhân tạo để làm gì, để mà nó free ride cái sector này. Nhưng mà trên nguyên tắc là không đúng, không có free ride cái sector này đúng theo cái kiểu mà như vậy. Cái trí tuệ nhân tạo nó không phải là cái dạng mà 1 cộng 1 là 2, 2 cộng 2 là 4 như vậy đâu. Nó không có cái nền tảng đó. Nó là một cái sự hợp thức hóa giữa cái bộ óc của con người để vô, và nó phải đưa ra một cái solution mà không có thể dùng bằng toán được. Nó là một cái cấu trúc mà multi dimension, chứ không phải là chỉ có một dimension là 1 cộng 1 là 2 đâu, không có. Nó là multi dimension, cho nên tất cả những cái đó nó không có phải là automation. Cho nên cái khác nhau, tôi sẽ làm một cái lần, chắc tôi phải làm một cái cuộc kiểu là programming, hay là một cái cuộc mà bình luận hay là thảo luận về cái trí tuệ nhân tạo thật sự nó là cái gì. Nó có khác nhau giữa cái automation hay là cái tự động đó, tự động, cái hệ thống mà tự động robotic đó. Nó có khác nhau giữa cái robotic và nó khác nhau giữa cái automation. Cũng có nhiều dạng lắm. Nó có một dạng nó là AI, và có một dạng không phải là AI. Nó là tab, nó kêu là nó run out of cái table, tức là cái tablet, để mà nó có pre-program decision, hay là pre-program data. Cũng giống như là một chiếc xe mà quý vị thấy mà lái tự động, chưa chắc nó là artificial intelligence. Nó tại nó đã pre-program rồi. Ví dụ như quý vị bắn cái wave nó ra, có những chiếc xe quý vị biết là nó control mình bằng cái wave đó, hoặc là tự động nó giảm ga, mình gài nó rồi thì nó bắn cái làn sóng ra, và nó tự động nó thắng lại, và nó tự động nó đạp ga đó, nó tăng ga cho xe hơi đó. Thì những cái điều đó nó nằm trong một cái program prefix rồi, chứ không phải là nó là một cái trí tuệ nhân tạo included. Cái hệ thống nó không cần trí tuệ nhân tạo, nó cũng vẫn là một cái hệ thống nó đã được pre-program. Ok, thì đó là cái level mà tôi nói ở đây. Ok, còn vài phút nữa thì chúng ta sẽ tới cái action của the Fed. Thôi bây giờ tôi sẽ để nhường cái này lại cho CNBC để mà họ bình luận, xong rồi mình sẽ trở lại để mình bình luận nó nha quý vị nhé. Hy vọng rằng cái internet nó chạy được.
That being said, Tyler, the economy continues to have a lot of momentum. We're seeing above-trend GDP growth led by the consumer, led by pockets of manufacturing, and that's leading to continued persistent inflation. We've made progress. We went from 9.1% CPI to 3.7 in a year's time. But it's not close to where the Fed wants to go. And we know that core PCE number is really what they pay attention to. At 4.2%, it's still much too high. So rates stay higher for longer, and that's what we have to live with.
John Bellows, do you buy that argument? Rates stay higher for longer, but the Fed stays where it is right now. We're near the end of the cycle.
I actually think we're a little bit closer than what Stephanie just said. If you look at the inflation numbers, for instance, on the 3-month basis, they're actually much better than on the 1-year basis. And what that signals is that the more recent progress on inflation has been substantial. I think similarly for growth, we've had a good growth year, but more recently what we've started to see is some cracks in that. Housing starts this week was notable for having a big turn. So I think we're much closer in terms of inflation being closer to target. I think we're closer in terms of seeing some slower growth. As a consequence, I don't think the Fed needs
speech at Jackson Hole, we've seen the needle subtly move back towards not quite, but almost to a neutral balance of risks. And I think that what I'm especially looking forward to the press conference for is to hear whether he ratifies the view that rather than being in the position of we're going to raise rates unless the data says otherwise, I'm looking for a comment that effectively says we're going to keep rates where they are unless the data says otherwise.
David Kelly, let's get a quick 20-second thought from you. You expect the Fed to sound hawkish, but maybe act a little more dovish.
Yeah, I don't expect them to raise rates today, but I think you'll see one dot still say, the dots will still say one more hike this year. So I think the messaging will still be cautiously hawkish. I do think they should be done, and I think they probably are done, because I do see some softening of the economy here.
That's very interesting. So you think they are done, but they will leave open the possibility of a move up later in the week. We are ready now to go for the Fed decision, and Steve Leisman.
The Federal Reserve maintaining its interest rate at 5.25% to 5.5%. But the committee continues trying to determine the, quote, extent of additional policy firming that may be appropriate. So there's this bias in the statement suggesting they're still looking to raise rates. And indeed, the average Fed forecast does continue to look for one more hike this year with an average forecast of 5.6%. Importantly, and I'll come back to that, there are 2 fewer cuts, 25 basis point cuts built in for next year. On the economy, economic growth was upgraded to solid from moderate. Job growth was said to have slowed, but remains strong. Inflation remains elevated, and the committee repeated its commitment to a 2% inflation target. The average forecast, let's get to the forecast for next year, now sees a 5.1% funds rate next year. That for the next several years by about 0.3, so it doesn't see as much unemployment as it previously forecast. And it continues to mention the banking system, but not do very much with it. It says tighter conditions, credit conditions for households could weigh on economic activity, but the extent is uncertain, and it's all unanimous, guys. Tyler?
All right, thank you very much, Steve. Stick around, and as we bring back our panel, and we're also joined by Bob Pisani and Rick Santelli. Let me turn to you, Bob. What is the market reaction here seconds after the Fed releases its report?
Well, here's the effects of higher for longer and a little more hawkish here. So yields up. I see S&P just turned negative. Well, we were up modestly on the day here, and I think everybody wants some confirmation. Core inflation is turning lower, but what you see here is more hawkish comments on the economy. The economy is growing stronger than they thought. So the GDP revised, it was 1%. The estimate now it's 2.1%. Unemployment was 4.1, now 3.8. So the economy is growing stronger than they thought. That's a little more aggressive, and we're seeing yields spiking up here. I think the fourth quarter is going to be very, very hard to read. Everybody was asking me today about what are they going to say about oil's been up, yields have been up. Dollar's been up, resumption of student loan debt. That's what people are talking about down here. So it's going to be very hard to figure out how to call what's going to happen in the fourth quarter because people are expecting the economy to slow down. But you sure didn't see it here from the comments from the Fed overall, guys.
All right, let's go out to Rick Santelli. Rick, what's your spin?
Well, it certainly looks to me like the higher for longer, I would sort of modify a bit. I would say holding here for longer, and that really describes it. And I think the reason they need to hold here for longer is because, like many of us, including the market, sensing some very sticky inflation out there. And I disagree a bit that this is hawkish. Okay, I understand that you had 12 officials that see one more rate hike, 7 that see us on hold, but I also see headlines here that job gain slowed. If there was one thing to say that would be meaningful coming from the Fed, it would be job gain slowed. And if you follow non-farm payrolls or you follow the unemployment rate, it certainly seems as though that is the case. And when it comes to the markets, look at what the 2-year note yield has done. It chopped back up to 5.14. Look at what 10s have done, back to 4.36. Why is this important? Many were taking solace in the fact that rates were down a bit today. I don't at all look at it that way. I look at it that the market's been tight, it's been orderly, and it's been rising. And yesterday, as I said on many refrains and choruses today, new cycle high yield closes, 2s, 3s, 5s, 10s, even 7s, except for 7s don't go all the way to 07 because they weren't around in 07. So we want to continue to see what the markets are saying. And why are the markets out of phase with the Fed now? When prior to this, when they were starting to raise rates and Fed funds were more in the 3s and 4% area, market rates were moving down. because they really thought inflation would mostly vanish. But the stickiness of certain pockets of inflation, and you could say X, food and energy, but those pockets are glaring and they bring a lot of eyeballs to the Federal Reserve. You could strip it out, but you can't ignore it.
Greg, let me ask you a little bit about the politics of the Fed here, in other words. So what they're saying about next year is very hawkish, right? They've said only 1 or 2 cuts instead of 3 to 4. Their median rate forecast is now 5.1 instead of 4.6%. How much of this is what David Wessel just said, which is that they're afraid of letting the market get too far ahead of itself and getting excited about rate cuts? But do you think they're actually still going to do as many rate cuts as they previously thought was likely?
You really have to heavily discount any projection for what they're going to do more than a few months from here. They actually have no idea what they're going to do. I would say that part of this, I'm going to guess, might have been internal Fed politics. There's a handful of members out there who have been talking about, yeah, they'd like to go one more time because they don't want to take any chances. And maybe the way you mollify them and get the unanimous vote that the Chair Powell got today is saying, we're not going to raise rates now, but we're going to tell people that we're not going to cut them as much. Now, when I look at the projections, you see an economy, and this is how he reconciles the very strong growth, very strong labor market that doesn't seem to be responding to the tightening they have today. He says, okay, we think the economy is going to be stronger than we think. We think unemployment is going to be lower than we think. All else equal, that creates more upward pressure on inflation. How do we respond? We extend the period of monetary restraint for longer. This is essentially the trade-off. We don't need to go higher, but we need to keep our foot at least depressed on the brake for longer to keep the economy from running ahead of its potential.
If we zero in on the last 3 months, though, we're talking about an economy with 2.4% core PCE inflation, adding about 100 and some thousand jobs a month. I mean, that feels to me like a very different picture than the one from 3 or 6 months ago that they might still be responding to.
You could tell two stories about the economy. You could look at the unemployment rate going up, as you know, many of us do, and tell us that's an economy that's starting to grow below potential. Or you can look at the GDP numbers, which are, 3% or plus for the current quarter, well above potential. And by the way, we'll get new revisions on Friday, and maybe the story will look very different. But I think that if you're the Fed, what you say is, even if the inflation numbers are doing what they're supposed to do, they're coming towards 2%, all of our models, all of our muscle memory says that good news on inflation cannot endure if the economy continues to run ahead of capacity. And therefore, we are not going to take a chance on that. And so, well, we don't feel like we have to raise them now and push the economy into recession. But this is an economy that, given the head of steam and the resistance thus far to tightening in train, says we need to basically maintain, again, the degree of restraint for longer than folks thought. And by the way, I think Wall Street might have been slow about this, but the bond market, we've seen 10-year yields moving up for some time. Yes. I think in some sense that was just, foreshadowing what the Fed just told us.
Stephanie Link, let me turn to you. Does this feel to you like a Fed that is close to done with this cycle?
Yeah, I do. I mean, I'm first and foremost, I'm glad that they paused. Not a surprise. They have risen rates 11 times, and plus they're doing QT, and they're going to continue to do QT, which doesn't get enough press in my opinion. So now we wait and we see, and we're now all data dependent. And the dates to keep in mind are on October 11th is the PPI number, and October 12th is the CPI number. Of course, we get the jobs number on the 6th. So we're all going to wait to see on that regard. I also thought it was interesting that they did revise GDP higher, and it's because we are doing better as an economy, much better than what most people expected. A lot of people at the beginning of the year, Tyler, expected us to be in a recession by now, and we're far from it with the Atlanta Fed tracker at 4.9. That number's going to come down, I know it, but at least we're above trend. And then finally, again, a reiteration of the 2% inflation target. He said it a lot at Jackson Hole, and they're recommitting to it again, and they're not going to come off that 2% inflation target. And we have a ways to go in terms of core PCE.
David Kelly, were these the hawkish sounds that you expected to hear out of the Fed?
Yes, they are. But I think we should be careful about this forecast. I completely agree with Greg that they don't know what they're going to do with rates next year. And what I'd say is this is not so much a soft landing forecast. It's really a soft landing scenario.
Okay. Ok, thôi mình trở lại cái operation của tụi mình đi. Bây giờ như thế này, đại khái là bây giờ cái tiền lời lên xuống của Fed thì kể như là giống như là tới một cái level mà nó ok rồi. Mình thấy giống như là nó ngã ngửa rồi. Bây giờ mình chỉ monitor những cái cổ phiếu mà nó chuẩn bị nó lên trong vòng 10 ngày nữa. Thì đại khái là bây giờ mình trở về cái cổ phiếu, những cái cổ phiếu chính của mình trong cái lúc này. Bây giờ thì hiện nay bây giờ đó chắc khoảng 15 phút nữa thì ông Fed ông ra ông sẽ nói chuyện sơ sơ, thì mình chắc cũng phải listen in chút xíu để nghe cái ông nói cái gì. Theo tôi nghĩ thì đại khái là ông cũng sẽ cho tất cả mọi người biết lý do tại sao mà không có tăng tiền lời và giữ nó 5.25 Fed Fund. Thì tôi nghĩ cái điều đó nó quan trọng ở chỗ là khi mà mình giữ nó được như vậy đó, thì nó tồn tại được như vậy đó, thì at least cái tương lai nó giữ nó lâu hơn thì nó cũng đỡ hơn, thì để cho nó cái lạm phát nó better hơn. Bây giờ không có được xuống tiền lời trong cái giai đoạn này, cái đà nó đang là để mà đẩy cái lạm phát xuống thì phải cho nó xuống tận, chứ không có thể nào mà tự nhiên nhảy vô cái là lên tiền lời được trong cái thời điểm mà ngay cái lúc này, quý vị biết không? Cho nên theo tôi nghĩ là cái điều đúng đắn bây giờ là giữ yên như vậy và để yên như vậy, để cho công ty họ điều chỉnh cái vấn đề mà bên trong của mỗi công ty để họ sẽ sắp xếp lại, để họ biết họ phải kêu là chuyển cái convertible note hay là những cái note của họ, nó tóm là họ phải restructure cái financial của công ty họ bên trong trước khi mà họ tiến thêm về phía trước, dù khoảng cỡ 1 năm 2 năm nữa thì phải restructure lại tất cả những cái financial. Thì theo tôi nghĩ thì những cái financial đó phải được tính toán lại. Thí dụ như những công ty nào mà họ liệu họ biết làm đó thì họ đi trước, giống như là AMC, giống như là Khóa, tụi nó đã restructure rồi. Bây giờ đại khái là trong vòng khoảng cỡ 6 tháng nay là completely nó clean house mấy cái tiền, mấy cái nợ nần, mấy cái loan cái là tiền lời cao là nó đã giải quyết. Thì như vậy đó thì mới có cái khả năng để mà nó đi lên mạnh hơn. Ok, cho nên cỡ nào cỡ thì tôi thấy cái operation tương lai của những cái cổ phiếu mà mình đang giữ như là AMC, Khóa, Coinbase, UPST, những cái cổ phiếu này là Thuray, vân vân, những cái cổ phiếu này nó chuẩn bị on upside hết. Quý vị chỉ cần đợi thêm vài ngày nữa hoặc là 1 tuần 2 tuần nữa thì we're gonna hit upside big time. Thì đại khái là bây giờ nội hôm nay đó chuyện gì sẽ xảy ra, thì bây giờ hôm nay thì thị trường nó sẽ xào lên xào xuống chứ quý vị, khoảng cỡ cũng chắc 1 lần 2 lần đại khái vậy đó. Thì hy vọng rằng cuối ngày thì là nó close on the upper half của cái high low ngày hôm nay, để mà chuẩn bị để mà follow through hay là carry over ngày mai, là thứ Năm, rồi thứ Sáu, rồi continue nguyên 1 tuần nữa, còn nguyên tuần tới nữa. Thì đó là cái mà tôi nghĩ nó better hơn là bây giờ ngồi tính từng ly từng tí với mấy cái tiền lời bây giờ. Ok, rồi bây giờ mình trở lại, đợi cái quote system nó on lại để mình trở vào mình coi một số cổ phiếu. Ok, nãy giờ tôi đang nói chuyện về cái thằng KVYO. Cái tay này nó là chỉ là một cái công ty mà bán quảng cáo thôi, nhưng mà những quảng cáo của nó thật sự trên nguyên tắc nó cũng không phải là một cái gì mà ngon đặc biệt gì cả. Nó không có cái nền tảng gì mà nó to lớn, nó chỉ 1 năm nó đem về khoảng cỡ 500 triệu mà tiền doanh thu thì cũng chả có bao nhiêu nữa. Nó có là cái doanh thu mà trong thị trường mà quảng cáo mà 500 triệu thì quý vị biết mà cũng chả có là bao nhiêu. Nó ra nó market cap, nó ra nó vốn hóa, nó kỳ này nó ra là tới khoảng gần 10 tỷ mà nó lại mở cửa rất là cao. Cho nên vì nó mở cửa cao như vậy đó với cái vốn hóa mà 10 tỷ mà mở cửa quá cao đến khoảng cỡ 39 đô thì lên tới gần 15 tỷ vốn hóa rồi, quý vị thấy không? Thì nếu mà nó làm như vậy thì tốt cho cái underwriter. Đại khái là underwriter là họ đã làm cái job tốt, là họ đem cái cổ phiếu này lên sàn với giá rất là cao đó, thì cái đó là cái tốt cho các công ty của KVYO. Nhưng mà đối với những người mà mua sau cái earning á, thì không có tốt chút nào cả. Sau earning, post earning thì tôi thấy mua giá 49 thì nó đánh một cái nó gãy xuống còn 34 rồi còn tiếp tục xuống nữa. Cái projection của tôi về KVYO đó, cái KVYO này nè, là vào khoảng cỡ từ 15 tới 20 đô thôi chứ không hơn được. Hồi sáng tôi đã thông báo với kênh chủ là đó là cái tính toán trong cái lúc mà tôi đang làm việc mà chưa có online, thì tôi đã tính trước là đó là cái giá mà tôi nghĩ rằng nó sẽ settle trong vòng 30 ngày trở lại. Đại khái là nó sẽ nằm trong cái range đó, cái range từ 15 tới 20, chứ không cách nào mà nó anything bigger, to hơn. Thì quý vị chỉ là sắp xếp như vậy. Mặc dù even nó xuống cái level mà 15 tới 20 nó vẫn còn khoảng có 7 tỷ vốn hóa, cho nên đường dài đó theo tôi nghĩ đó nó chỉ còn lại khoảng 1/3 cái vốn hóa mà đầu tiên của nó là 10 tỷ thôi. Tôi nghĩ cao nhất á, là với cái doanh thu mà 500 triệu mà của nó thì tôi nghĩ cao nhất là nó chỉ có thể khoảng cỡ 3 tỷ maximum. Có nghĩa là phải dưới 10 đồng này, chứ không phải mà bình thường đâu. Nếu mà tính ra mà cái growth rate nó không có, mà những cái công ty này ra unless nó có những cái platform mà kinh hoàng để mà thằng Google mua nó lại, chứ thật sự ra Google nó dominate tất cả những cái quảng cáo online mà hết rồi. Cho nên tôi nghĩ cái integration của cái KVYO mà cho cái AI không có effective, không có thể nào mà cạnh tranh được mà dễ dàng. Nếu mà nó ra cũng tốt, là nó ra platform mới thôi thì đại khái là tốt, nhưng mà nếu mà hên xui nếu mà được mà Google mua lại hay là hay Microsoft mua lại cái platform này của nó thì có thể nó better hơn. Còn nếu không thì với cái vốn hóa bây giờ, với cái growth rate của nó bây giờ đó, tôi nghĩ phải dưới 10 đô, chứ không có trade mà trên 10 đô được đâu. Not right away. Ok, thì đó là cái mà nhìn của tôi về KVYO. Nãy giờ tôi thấy không thấy nó trade nữa. KVYO hay là bị hot trading. Như vậy tôi không thấy cái action nào hết, nhưng mà không sao, để từ từ mình coi lại, không có gì mà nó khủng hoảng cả. Ok, thì đó là cái vấn đề của KVYO. Hy vọng rằng ok rồi, bây giờ mình sẽ vào mình coi mấy cái core system của mình coi lúc này nãy giờ cái giá cả nó tới đâu rồi. Thị trường cũng còn đang đứng vòng vòng đây nha quý vị nhé. Nó đang chuẩn bị nó make a move. Hy vọng rằng cái move này của nó là ổn định. Ok, bắt đầu những cái bid ask vân vân nó stabilize rồi, thì theo tôi nghĩ chắc mình cũng chuẩn bị cái là looking good rồi đó. Ok, cái sector của EV thì Tesla đang dẫn đầu cũng như bình thường. Hồi sáng rồi tôi thấy NIO có rất là nhiều action, và bữa nay NIO trade gần 100 mấy chục triệu. Ok, NEO sẽ có convertible note bán ra để mà góp vốn thêm cho công ty. Để coi giờ này Fed ra nó bình luận gì chưa, để mình nghe chút xíu coi Fed nó có nói gì không. Cái ông Fed, mấy ông Fed đây.
They need to be cutting rates by another 1.5 to bring it to what they think is neutral, or that they're going to be running it very restrictive, or like you said, Greg, that they're behind the times. Rich, do you yourself kind of have a view on what's going on with long-term interest rates and which side of this trade you'd be on?
But yes, I mean, so I think what we need to do is distinguish between the very front end of the curve, the federal funds rate, and the longer end of the curve, say a 10-year Treasury bond. You know, historically, there was a positive term premium in the yield curve. Investors got a higher yield and return by taking on interest rate risk. That term premium was essentially squeezed out of markets in the prior decade, and certainly my thinking is looking ahead, especially given all the government debt that's been issued in the last dozen years, is that we will see a higher term premium and possibly a steeper yield curve. And the way that balances out between the long and the front end, you know, we'll find out. But that's the way it looks to me right now.
Does this all spell soft landing to you, Rich?
Well, it's certainly a Fed that thinks that the baseline is a soft landing. I continue to be in the camp that thinks we're going to probably need to see some additional softening in the labor market beyond what they're showing. But look, this has been a very surprising cycle. The pandemic, the reopening, the recovery, the surge in inflation, and now the rapid disinflation. So I guess the real lesson to take from the last 3 years is, you know, be prepared to be surprised.
What are the fourth quarter potholes that you have your eye on, Rich?
Well, you know, the economy has gotten a lot of support from the ability of households to draw down that $2.5 trillion of excess saving. Again, the aggregate. You know, we had a period where real disposable income was contracting for about 1.5 years, but households kept spending. So I do think that you know, the ability to keep on chugging along in some sense is more limited than we saw. Also, look, oil prices are a wild card. It's sort of, we've been focused on so many other things in the last several months. We've had a big move up in oil on supply decisions. You know, the U.S. economy is different from in the past. It's less exposed to higher oil prices. But again, high oil prices push up headline inflation, and that's obviously a wild card as well.
Rich, thank you so much as always. It's great to see you. Richard Clarida.
Thank you.
And I don't know whether, Greg, whether you're staying or you're going. You're welcome to stay as long as you want. Yeah. He's staying.
You better stick around, or you were talking to each other when we come back from this break. We're just about 6 minutes away from hearing from the Fed chair himself. Jay Powell's press conference begins at 2:30. We'll take you there live as soon as it starts. There's more of our CNBC special.
Cho nên trong cái thời điểm đây midday đó, nếu mà quý vị không muốn nghe những cái lời bình luận của nó đó, để mà khỏi bị nhức đầu đó, đại khái là để mình tập trung vô cái đầu của mình làm cái gì đó, thì mình cứ không cần nghe, mình không để ý tới, không muốn nghe, hoặc là lâu lâu mình mở lên mình nghe một chút xíu thôi, chứ cũng không cần thiết phải nghe từ đầu đến cuối. Thì đại khái là như vậy. Ok, thôi bây giờ để nếu mà như vậy đó thì để tôi tắt luôn cho cái bình luận của cái ông Fed này đi nha. Rồi để mình làm việc cho nó dễ, chứ còn nó tóm lại là cái decision nó vậy rồi. Bây giờ nó chỉ ra, nó chỉ justify hay là nó nói cho tất cả mọi người biết, là không biết là nó muốn nói là ok, well, đó là cái quyết định của chúng tôi, thì chúng tôi muốn không có lên tiền lời như vậy đó, thì tôi sẽ justify bằng cách như vậy, thì nó sẽ cho một cái justification cho mọi người, đại khái là nó cho mọi người biết rằng ok, well, cái quyết định đó của tôi là đúng đó. Thì tôi nghĩ là cái mà thị trường muốn thấy hay là muốn nghe đó là kỳ tới ổng xuống tiền lời hay lên tiền lời, hay là sẽ giữ nguyên tiếp tục. Nhưng mà theo cái nhìn của tôi đó thì ổng sẽ không có trả lời đâu. Ông Fed này ổng không có cho cái hint gì cho quý vị dễ dàng là họ sẽ lên tiền lời hay là xuống tiền lời hay là vân vân. Tôi không nghĩ họ sẽ làm cái điều đó. Họ sẽ không có nói cho mình biết để mà đại khái là mình chuẩn bị cái đầu óc của mình cho cái tiền lời tương lai đâu. Nó tóm lại là bây giờ mình chỉ biết là tiền lời nó sẽ đi giữ được cái mức là 5.25 Fed Fund, nó nằm ở đó rồi. Quý vị cộng thêm như là chắc theo tôi nghĩ chắc cộng thêm 3 point nữa đi cho prime rate. Thường prime rate đó là cái tiền mà tiền prime đó là thường người ta dùng cho mortgage vân vân đó, thì là khoảng cỡ thêm 3 point nữa, thì đại khái là prime rate là 3 point cộng thêm cái số tiền cái Fed Fund, thì đại khái nó ra khoảng cỡ 8,5 đâu đó gì đó. Rất là khó, vẫn là rất là khó cho những người mà họ làm tiền bây giờ, họ sống mệt mỏi lắm. Tiền nhà mà quý vị biết mà ở California mà trả một cái nhà 1 triệu mà trả 8 phân lời, theo tôi nghĩ đó quý vị trả chắc học máu luôn á, trả lơ tơ mơ đó, là không có thể nào mà có thể gồng gánh được. Thì hồi nãy analyst nó cũng nói sơ về vấn đề mà tiền lời của nhà cửa có assume được hay không. Hồi xưa á, khi mà tôi mà làm lúc mà full time, mà khi mà cái thời mà nhà cửa nó xuống năm thập niên 90 đó, 90 rồi 80 rồi đó, cái thời điểm đó thì tôi thường buy out những cái nhà mà có tiền lời rất là thấp đó, và mình tới mình assume cái mortgage của họ thôi. Và thường nếu mà họ underwater thì mình cho họ một số tiền nhỏ để mà họ exit, mà họ để cái mortgage lại cho mình. Còn nếu họ bỏ thì cái mortgage đó nó cũng phải bị nhà băng kéo và họ sẽ mất cái credit. Cho nên cái deal của mình là mình sẽ giữ cái loan đó, và mình sẽ refinance lại một thời điểm sau. Thì đó là cái deal mình có với những người chủ như vậy, và chúng tôi làm rất là nhiều deal như vậy, làm rất là good. Rất là nhiều người họ được cứu ra khỏi cái khó khăn về vấn đề mà tạm thời đó, và họ không có bị mất credit, rồi thì họ cũng sau này họ cũng mua nhà lại được những nơi khác thôi. Mà cái thời đó tôi nhớ là những cái nhà ở trong Fountain Valley chúng tôi thường làm cái điều đó, và chúng tôi làm rất là thành công. Sau này thì bắt đầu nó đổi lại cái hệ thống là nó không có cho assume hay là nó không có cho mà take over kiểu đó nữa. Nếu mà nó find out mà khi mà mình đổi cái title đó của cái nhà đó mà qua cái chủ mới đó, thì nó sẽ call cái loan due, có nghĩa là nhà băng nó sẽ gọi cái loan nó due, là bắt quý vị phải refinance hoặc là nó foreclose cái nhà đó để mà nó lấy tiền lại. Thì đó là cái mà thường như vậy. Nhưng mà thường lúc trước đó, nếu mà cái nhà bị underwater đó hay là bị ngọt đó, thì nhà băng nó không dám làm. Nó làm cái điều đó nó sẽ bị mất cái nó không có recover lại được đó. Nhưng mà có nhiều nhà băng nó lì, nó sẽ làm vì biết không, nó sẽ làm điều đó, và tôi cũng đã thấy cái chuyện đó xảy ra. cỡ phải nghe chút xíu. Chắc tôi thực tế phải lấy một cái microphone double action đó, để cho mà quý vị có thể vừa nghe mà vừa monitor được cái hệ thống, chứ còn đổi tới lui hoài nó phiền quá. Ok.
Jobs per month, a strong pace that is nevertheless well below that seen earlier in the year. The unemployment rate ticked up in August but remains low at 3.8%. The labor force participation rate has moved up since late last year, particularly for individuals aged 25 to 54 years. Nominal wage growth has shown some signs of easing, and job vacancies have declined so far this year. Although the jobs to workers gap has narrowed, labor demand still exceeds the supply of available workers. FOMC participants expect the rebalancing in the labor market to continue, easing upward pressures on inflation. Inflation has moderated somewhat since the middle of last year, and longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Nevertheless, the process of getting inflation sustainably down to 2% has a long way to go. The median projection in the SEP for total PCE inflation is 3.3% this year, falls to 2.5% next year, and reaches 2% in 2026. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. As I noted earlier, since early last year, we have raised our policy rate by 5.25 percentage points. We see the current stance of monetary policy as restrictive, putting downward pressure on economic activity, hiring, and inflation. In addition, the economy is facing headwinds from tighter credit conditions for households and businesses. In light of how far we have come in tightening policy, the committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue the process of significantly reducing our securities holdings. We are committed to achieving and sustaining a stance of monetary policy that is sufficiently restrictive to bring inflation down to our 2% goal over time. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. If the economy evolves as projected, the median participant projects that the appropriate level of the federal funds rate will be 5.6% at the end of this year, 5.1% at the end of 2024, and 3.9% at the end of 2025. Compared with our June summary of economic projections, the median projection is unrevised for the end of this year, but has moved up by 0.5 percentage point at the end of the next 2 years. These projections, of course, are not a committee's decision or plan. If the economy does not evolve as projected, the path of policy will adjust as appropriate to foster our maximum employment and price stability goals. We will continue to make our decisions meeting by meeting based on the totality of the incoming data and their implications for the outlook for economic activity and inflation, as well as the balance of risks. Given how far we have come, we are in a position to proceed carefully as we assess the incoming data and the evolving outlook and risks. Real interest rates now are well above mainstream estimates of the neutral policy rate, but we are mindful of the inherent uncertainties in precisely gauging the stance of policy. We're prepared to raise rates further if appropriate, and we intend to hold policy at a restrictive level until we're confident that inflation is moving down sustainably toward our objective. In determining the extent of additional policy firming that may be appropriate to return inflation to 2% over time, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below-trend growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Thank you. Colby Smith with the Financial Times. What makes the committee inclined to think that the Fed funds rate at this level is not yet sufficiently restrictive, especially when officials are forecasting a slightly more benign inflation outlook for this year? There's noted uncertainty about policy lags. Headwinds have emerged from the looming government shutdown, the end of federal childcare funding, resumption of student debt payments, things of that nature.
So I guess I would characterize the situation a little bit differently. So we decided to maintain the target range for the federal funds rate where it is at 5.25% to 5.5%, while continuing to reduce our securities holdings. And we say we're committed to achieving and sustaining a stance of monetary policy that's sufficiently restrictive to bring down inflation to 2% over time. We said that. But the fact that we decided to maintain the policy rate at this meeting doesn't mean that we've decided that we have or have not at this time reached that stance of monetary policy that we're seeking. If you looked at the SEP, as you obviously will have done, you will see that a majority of participants believe that it is more likely than not. Others have already reached that. So it's something where we're not making a decision by deciding to about that question by deciding to just maintain the rate and wait.
So right now it's still an
Ok, thôi bây giờ nó tóm lại bây giờ này, cái ông Fed này ổng cũng đi hai hàng rồi. Thôi bây giờ mình cho ổng nghỉ ngơi đi. Chứ còn nói tới nói lui thì cũng là đi hai hàng thôi. Tức là next meeting cũng không có chuyện gì xảy ra. Và có chuyện gì xảy ra đi chăng nữa nó cũng chẳng có update gì, phải đợi next meeting. Còn bây giờ mình chỉ biết cái chuyện hiện tại thời bây giờ thôi. Thì đại cái là bây giờ đây đến cuối ngày thì mình expect là thị trường nó sẽ make a good move. Quý vị cứ ready for the big move. Tilray is ready for an upside. AMC ready for an upside. Coinbase upside. UPST ready for upside. CVNA ready for upside. Everybody ready for upside. Okay, so cái action nó ready to is gonna happen in the next hour or so. Tôi coi CVYO này sao tự nhiên nó không có trade nữa. CVYO. Tôi nghĩ là tụi nó take off cái list rồi. CVYO tụi trader tụi brokerage house nó take off cái list, nó không cho trade nữa. Thì chắc là phải để ngày mai. Có thể tạm thời bữa nay nó không có comfortable để mà trade này cho clientele của nó take off the list. Anyway, looking great. Tất cả mọi chuyện đều look good hết. Look good. 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 Look good mỗi câu hỏi nó đều đưa cái cổ phiếu thị trường đi lên đi xuống tùy cơ ứng biến, thì đại khái là nó sẽ cũng chẳng đã về những cổ phiếu của mình, nhưng mà những cổ phiếu mà mình chọn thì đương nhiên là nó nhờ cái mà lên xuống của cái thị trường này, nó kéo cái cổ phiếu mình lên xuống đây đến cuối ngày. Ok. Trong cái hiện nay bây giờ tôi muốn coi thằng AMC coi nó làm ăn sao rồi. Thì tôi coi Theory với AMC nha. Looking good, looking good. Okay. Cái action của AMC tôi nghĩ trong vòng vài ngày thôi nó sẽ break out khỏi cái level mà 9 đồng mấy đó. Nhìn thấy cái kiểu này là chắc là break out rồi. Tôi nghĩ cái break out rất là cao, không có nhỏ được. 13,5 đồng tới 14 đồng là it's a matter of vài tiếng đồng hồ thôi. Cho nên cái movement này nó rất là mạnh nha quý vị nha. Cho nên các bạn nào mà chưa có cái position của AMC đó, đây là cái chart 15 phút này. Ok. Nếu mà quý vị các bạn nào mà chưa có cái position của AMC đó, quý vị phải hurry up and make your move before the breakout. Looks like the double bottom is here, ready for an upside big time. Thị trường nó ổn định và nó sẽ không có chịu mà cái giá này nữa. Tôi nghĩ nếu mà nó lên tới 14 đồng là đây là lần đầu tiên mà trong cái chuỗi ngày mà dài của nó đó, ok, mà nó cho những khoảng cỡ 3-4 tuần nay đó là nó điều chỉnh với thị trường, với những cái vấn đề mà của tài chính bên trong của nó đó, là nó đại khái là nó break down từ 50 nó đi xuống. Thì cái 50 này là trước kia là sau khi cái reverse split như vậy nha. Cho nên đại khái lúc đó là khoảng cỡ 2 đồng, thì đại khái 2 đồng đến 3 đô, 2-3 đô gì đó, đại khái vậy đó. Thì hoặc là 5 đô gì đó, tôi nhớ gì đó. Ok. Thì cái position của nó nên có, đừng có everybody should have position của AMC trước khi mà nó lên 14 đồng. Thì đại khái là trader với member của tôi ở đây thì hầu hết là dưới 9 đồng đó. Thì đại khái là 9 đồng, 8 đồng cũng có, 8 đồng 7 đồng 75 cũng có, 8 đồng 2 cũng có, đại khái cái range đó, which is perfect. Ok, cái entry level như vậy quá tốt rồi đó. Chuẩn bị for breakout within the next few sessions. Ok, few trading session của AMC. Khi mà nó break out đó, theo cũng khó lắm, theo cũng mệt lắm. Tại vì khi mà mình dối theo đó, mình đặt order vô cái quý vị quýu quá để vô cái order mua at market. Bình thường mà mua mà ngay cái market price là nó đưa giá trên trời không à. Cho nên mình trong lúc mà nó chưa có break out, mình có position lắm thì mình còn có thể mình mua với cái giá khoảng cỡ đại khái là theo ý của mình, đặt order vô limit mua được, cầm cự được cái giá đó better hơn. Chứ còn lúc mà nó chạy rồi mình chạy theo, mình cứ dối theo, mình đánh cũng mệt lắm. Cho nên lúc đó thì cái volume nó cao, mà nó vừa cao mà mình vừa trade nó cũng mệt mỏi. Cho nên thôi bây giờ mình cứ có position nó trước khi nó break out đi là better hơn. Vì cái chart của nó đã show cái breakout pattern ready rồi. Anytime. Bây giờ bất cứ một cái tin tức nào mà không xấu đi chăng nữa, bớt xấu hay là xấu ít một xíu nó cũng lên. Tại vì tất cả những tin tức mà xấu nhất của nó về dilution, về tùm lum tùm la về cổ phiếu của nó đã ra hết rồi, cho nên bây giờ chỉ còn những cái tin tức mà tốt để ra thôi, hoặc là nếu mà không tốt quá nó cũng lên như thường. Okay. Nên nếu mà chưa có position của AMC thì nên có. Ok, bữa nay chắc không biết là có câu hỏi hay là nào của các bạn hay không. Để tôi có những câu hỏi của các bạn để mà tôi trả lời cho nó dễ. Còn không thì mình trả diễn đàn lại cho kênh chủ, rồi thì mình sẽ làm việc với member với trader của mình trong cái trading từ đây đến hết giờ. Thì đại khái là đây đến cuối ngày thì chắc thị trường nó cũng xào lên rồi xuống đâu đây thôi, để mà nó nghe rồi nó tiêu hóa được cái vấn đề của ông Fed này. Đại khái nó muốn kiếm một cái lý do để mà nó trade stock thôi, chứ còn bây giờ analyst nó cũng đã biết là tiền lời không có tăng lên nữa, nhưng mà đương nhiên không xuống, giữ như vậy với cái level này càng dài càng lâu càng tốt, để cho cái thị trường nó correction lại, cho nó giữ cho nó lâu để mà lạm phát cho nó kềm lại. Và những người mà họ cần phải điều chỉnh lại cái nội bộ hay là những cái tài khoản của họ vân vân, những cái tiền bạc gia đình hay là công ty rồi đó, là họ có giờ để họ nó sẽ go over để tôi làm một cái homework research đàng hoàng, mình sẽ sắp xếp cái điều đó. Ok, rồi hy vọng rằng mọi việc đều tốt đẹp đến tất cả những trader của mình giờ này, và maybe until the market close. Ok, thank you very much, và everything gonna be fine, so everything gonna be good. See you, bye bye.
We see rising oil prices. We see auto workers striking. There's the looming, very real possibility of a government shutdown. And I was just wondering, for each of those things, could you talk about how you're thinking about how that might affect the course for the Fed and the economy?
So there is a long list, and you hit some of them. But it's the strike, it's government shutdown, resumption of student loan payments, higher long-term rates, oil price shock. There are a lot of things that you can look at. So what we try to do is assess all of them and handicap all of them. And ultimately, though, there's so much uncertainty around these things. To start with the strike, first of all, we absolutely don't comment on the strike, as we have no view on the strike one way or the other. But we do have to make an assessment of its economic effects to do our jobs. So, the thing about it is so uncertain. It will depend. The economic effects, it could affect, we've looked back at history, it could affect economic output, hiring, and inflation. But that's really going to depend on how broad it is and how long it's sustained for. And then it also depends on how quickly production can make up for lost production. So none of those things are known right now. It's very, very hard to know. So you just have to leave that uncertain, and we'll be learning, I think, over the course of the next intermeeting period, much more about that. And the same is true for the others. I don't know if you mentioned shutdown. I think of all of these as being on the list. We don't comment on that. It hasn't traditionally had much of a macroeconomic effect. Energy prices being higher, that is a significant thing. Energy prices being up can affect spending. It can affect over time a sustained period of you can have a long period where the economy is just very uncertain, and it'll affect growth, it'll affect all kinds of things. It can be a miserable period to have inflation constantly coming back and the Fed coming in and having to tighten again and again. So the best thing we can do for everyone, we believe, is to restore price stability. I think now, today, we actually, we have the ability to be careful at this point and move carefully, and that's what we're planning to do. So we fully appreciate the benefits of being able to continue what we see already, which is rebalancing in the labor market and inflation coming down without seeing, an important, large increase in unemployment, which has been typical of other tightening cycles. So.
Hi, thank you. Chris Rugaber at Associated Press. When you look at the disinflation that has taken place so far, do you see it mostly as a result of what some economists are calling the low-hanging fruit, such as the unwinding of supply chain snarls and other pandemic disruptions, or is it more a broad disinflationary trend that involves most goods and services across the economy? Thank you.
So if I understood your question, I would say it this way. I think we knew from before when we lifted off, but certainly by the time we knew that bringing inflation back down was going to take, as I call it, the unwinding of these distortions to both supply and demand that happened because of the pandemic and the response. So that unwinding was going to be important. In addition, monetary policy was going to help. It was going to help supply side heal by cooling demand off, and just in general, a lot better aligning supply with demand. So those two forces were always going to be important. It's very hard to pull them apart. They work together. I do think both of them are at work now, and I think they're at work in a way that shows you the progress that we are seeing.
Michael McKee from Bloomberg Television and Radio. In June, you forecast a 5.6% year-end median Fed funds rate, and since then, you've more than doubled your growth forecast. You lowered your unemployment forecast significantly. So what would justify that last move? Because the median forecast is for lower inflation. And given all the known unknowns that you face, how much confidence do you have, can investors have, or the American people have in your forecasts?
Well, forecasts are highly uncertain. Forecasting is very difficult. Forecasters are a humble lot with much to be humble about. But to get to your question, though, what's happened is growth has come in stronger, right? Stronger than expected, and that's required higher rates. Unemployment, you also see that the ultimate unemployment rate is not as high, but that's really because of what we've been seeing in the labor market. We've seen more and more progress in the labor market without seeing significantly higher unemployment. So we're continuing that trend. In terms of inflation, you are seeing the last three readings are very, very good readings. It's only three readings. We were well aware that we need to see more than three readings. But if you look at June, July, and August, you're looking at really significant declines in core inflation, largely in the goods sector, also to some extent in housing services, and just a little in non-housing services. Those are the three buckets. Headline inflation, of course, has come way down, largely due to lower energy prices, some of which is now reversing. So I think people should know that economic forecasting is very difficult, and these are highly uncertain forecasts. But these are our forecasts. We have very high quality people working on these forecasts, and I think they stand up well against other forecasters. But just the nature of the business is the economy is very difficult to forecast.
Given the forecast that you have, what justified not moving today, and what could justify moving in the future if you think inflation is coming down? In other words, why did you leave that extra dot in?
Well, I think we have come very far, very fast in the rate increases that we've made. And I think it was important at the beginning that we moved quickly, and we did. And I think as we get closer to the rate that we think, the stance of monetary policy that we think is appropriate to bring inflation down to 2% over time, the risks become more two-sided. And the risk of over-tightening and the risk of under-tightening, it becomes more equal. And I think that the natural common sense thing to do is, as you approach that, you move a little more slowly as you get closer to it. And that's what we're doing. So we're taking advantage of the fact that we have moved quickly to move a little more carefully now as we sort of find our way to the right level of restriction that we need to get inflation back down to 2%.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. With your focus on year-over-year PCE, isn't it true that base effects are huge, and that by the time you meet in November, that it's more likely that you'll have a low PCE number that would make you feel more comfortable? And secondly, how would the lack of key indicators like CPI, the jobs report, impact your approach in upcoming meetings if we were to have a government shutdown? Thank you.
Yeah, I missed the first question. What was the what factors?
The base factors.
Base factors. Okay. So on that, we're looking at just monthly, right? You can look at just monthly readings and see what the increase was from the prior month. So you're right. When you go back 3, 6, and 12 months, you get base factors, but we can adjust for that. In terms of not getting data, again, we don't comment on government shutdowns. It's possible if there is a government shutdown and it lasts through the next meeting, then it's possible we wouldn't be getting some of the data that we would ordinarily get, and we would just have to deal with that. And I don't know. It's hard for me to say in advance how that would affect that meeting. It would depend on all kinds of factors that I don't know about now, but it's certainly a reality that's a possibility. Yes. I mean, if you're looking, we can tell how much inflation has gone up in a given month, right? And that's what we're looking at. And month by month, what's the reading? And I think what we're really looking at is there's a tendency to look at shorter and shorter maturities, but they're incredibly volatile and they can be misleading. That's why we look at 12-month. But I think in this situation where it looks like we've had a bit of a turn in inflation starting in June, we're also looking at 6 months and even 3 months, but really 6 months inflation. So you're looking at it over that period and over longer periods. That's the right way to go. And we don't need to be in a hurry in getting to a conclusion about what to do. We can let the data evolve.
Thanks for the question, Chair Powell. Edward Lawrence with Fox Business. So I want to focus back in on oil prices. We're seeing oil prices, as you mentioned, move up, and that's pushing the price of gas. So how does that factor into your decision to raise rates or not? Because the last two inflation reports, PCE and CPI, we've seen the overall inflation has actually risen.
Right. So, energy prices are very important for the consumer. This can affect consumer spending. It certainly can affect consumer sentiment. I mean, gas prices are one of the big things that affects consumer sentiment. It really comes down to how persistent, how sustained these energy prices are. The reason why we look at core inflation, which excludes food and energy, is that energy goes up and down like that, and it doesn't. Energy prices mostly don't contain much of a signal about how tight the economy is, and hence don't tell you much about where inflation's really going. However, we're well aware, though, that if energy prices increase and stay high, that'll have an effect on spending, and it may have an effect on consumer expectations of inflation, things like that. That's just things we have to monitor. So.
On the consumer, they're putting more and more of this on their credit card. The consumer seeing record credit spending. How long do you think the consumer can manage that debt at higher interest rates now? And are you concerned about a debt bubble related to that?
So to finish my prior thought, I was saying that's why we tend to look through energy moves that we can see as short-term volatility. Turning to consumer credit, of course we watch that carefully. Consumer distress, measures of distress among consumers were at historic lows quite recently, during and after the pandemic. They're now moving back up to normal. We're watching that carefully, but at this point, these readings are not at troublingly high levels. They're just kind of moving back up to what was the typical in the pre-pandemic era.
Hi, Jean Young with M&I Market News. Yields along the Treasury curve have risen to their highest in years. What is the Fed's view about what's been driving that increase in recent weeks? And how much of it can be attributed to macro explanations and how much to technical factors?
So you're right. Rates have moved up significantly. I think it's always hard to say precisely, but most people do a common decomposition of the increase, and the view will be it's not mostly about inflation expectations. It's mostly about other things. Either term premium or real yields, and it's hard to be precise about this. Of course, everyone's got models that'll give you a very precise answer, but they give you different answers. So, but essentially, they're moving up because it's not because of inflation. It's because it'll probably have something to do with stronger growth. I would say more supply of treasuries. The common explanations that you hear in the markets kind of make sense.
Kyle Campbell, American banker. Thank you for taking the questions. Just two on housing. You've said slower shelter cost growth is in the pipeline and will reflect in inflation readings as new leases are signed. But there's also some questions out there about the way housing costs are measured, particularly the use of rental equivalents, which are estimates from homeowners about what their homes would rent for if they were in the rental market. So my question is, how much of the effort to tame inflation, both as it's measured and felt by the broader public, hinges on housing supply? And then as far as a constrained housing supply being sort of exacerbated by this sort of lock-in effect of mortgages being higher now than they were at their recent historic lows, how is that going to impact future thinking about taking interest rates to that lower bound in the future?
So on the supply point, of course, supply is very important over time in setting house prices and for that matter, rents. And supply is kind of structurally constrained. But in terms of where inflation's going in the near term, though, as you obviously know, a lot of it is leases that are running off and then being re-signed or released at a level that's it won't be that much higher. It would have a year ago it would have been much higher than it was a year before. Now it may be below or at the same level. So as those leases are rolling over, we're seeing what we expect, which is measured housing services inflation coming down. Your second question was the lock-ins. How much is that affecting things, really?
Potentially bring rates down to their lower bound in the future, sort of creating that sort of bubble of buying and then a lock-in that sort of stagnates the housing market.
I think we look at I would look at the lock-in, the idea being that people are in very low rate mortgages, and even if they want to move now, it would be hard because the new mortgage would be so expensive, and that's explaining that's one of the explanations for what's happening broadly in the labor market. Would that play a role in our future decisions in a future loosening cycle about whether we would cut rates? No, I don't think it would. I mean, I don't think that's. I think we'd be looking at fundamentally what rates does the economy need, and in an emergency like the pandemic or during the global financial crisis, you have to cut rates to the point that you have to do what you can to support the economy. So I wouldn't think that would be a reason for us not to do that. It's not something we're thinking about at all right now, but down the road I wouldn't think so.
Hi, Nancy Marshall-Genser with Marketplace. Chair Powell, you've mentioned several things that would possibly weigh on consumer confidence, maybe cut back consumer spending, possible government shutdown, high gas prices. At this point, would the Fed welcome a decrease in consumer spending? Would that help you get inflation closer to your 2% target?
I wouldn't say it that way. We're not looking for a decrease in consumer spending. It's a good thing that the economy is strong. It's a good thing that the economy has been able to hold up under the tightening that we've done. It's a good thing that the labor market's strong. The only concern, and it just means this: if the economy comes in stronger than expected, that just means we'll have to do more in terms of monetary policy to get back to 2%, because we will get back to 2%. Does that answer your question?
Yeah, and I guess on the other hand, would you worry that could contribute to an economic slowdown or even a recession?
Well, that's always a concern. Concern number one is restoring price stability, because in the long run, that's something we have to do so that we can have the kind of economy we really want, which is one with sustained period of tight labor market conditions that benefit all, as I've said a couple times. So that said, of course, we also now, given how far we've come with our rate hikes and how quickly we've come here, we do have the ability to be careful as we move forward because of that consideration.
Thank you, Chair Powell. Simon Rabinovich with The Economist. One of the factors in the economic resilience to date appears to be a lesser degree of rate sensitivity than in the past. Obviously, we've talked about households with long fixed rate mortgages, also companies that refinanced before last year. what is your thinking about the efficacy of rates and how that's changed? And then related to that, how do you think about the distributional consequences, in the sense that if you're a relatively wealthy household with a long fixed rate mortgage, the past year has not been all that tough with rates going up, whereas if you're relying on your credit card for supporting your consumption, in fact, times are getting a lot tougher, a lot more quickly. Thanks.
So what? I guess it's fair to say that the economy's been stronger than many expected, given what's been happening with interest rates. Why is that? Many candidate explanations. Possibly a number of them make sense. One is just that household balance sheets and business balance sheets have been stronger than we had understood, and so that's spending is held up and that kind of thing. We're not sure about that. The savings rate for consumers has come down a lot. The question is whether that's sustainable. That could be. It could just mean that the date of effect is later. It could also be that for other reasons, the neutral rate of interest is higher for various reasons. We don't know that. It could also just be that policy hasn't been restrictive enough for long enough. And there are many candidate explanations. We have to, in all this uncertainty, make policy. And I feel like what we have right now is what's still a very strong labor market, but that's coming back into balance. We're making progress on inflation. Growth is strong, but I think by many forecasts, many forecasts call for growth to moderate over the course of the next year. So that's where we are, and we have to deal with what comes. On your second question your second question was distributional, but can you be a little clearer about that?
My point there was that if you're somebody who has a long fixed rate mortgage, you've been able to endure the higher rates relatively easily. If you're somebody who's living month to month off of your credit card, current financing rates are punitive.
Yes. And so the point I would make there is that we're trying to get inflation back down. The people who are most hurt by inflation are the people who are on a fixed income. If you're a person who spends all of your income, you don't really have any meaningful savings. You spend all your income on the basics of life: clothing, food, transportation, heating, the basics. And prices go up by 5, 6, 7%. You're in trouble right away. Whereas even middle class people have some savings and some ability to absorb that. So it is for those people, as much as for anybody, that we need to restore price stability. And we want to do it as quickly as possible. Obviously, we would like to do that. We'd like the current trend to continue, which is that we're making progress without seeing the kind of increase in unemployment that we've seen in past things. But you're right, though. When we raise rates, people who are living on credit cards and borrowing are going to feel that more. They are. And of course, people with lots of savings also have a much lower marginal propensity to consume, and so it's not going to affect them as much.
Go to Greg Robb for the last question.
Thank you, Chair Powell. Greg Robb from MarketWatch. In the Beige Book recently, you can tell that the Fed has been surveying nonprofits and community groups about the economic health of low-income Americans, moderate-income Americans. I have two questions about this. Are you going to use that data to maybe come up with sort of like a quarterly survey of those groups, like the Senior Loan Officer Survey? And and also the second question is, from your recent readings of these surveys, how are low and moderate Americans doing? Is there this thing where like the GDP is strong because of wealthy Americans kind of driving things? I just want to get your sense of the health of that sector. Thank you.
So I don't know about the quarterly survey. That's an idea we can take away and think about. In terms of how low and moderate Americans, they're clearly were suffering from high inflation. I think during the pandemic, the government transfers that happened were very meaningful. And if the surveys that we take showed that low and moderate income people were actually in very, very strong financial condition. I think now it's a very hot labor market, and you're seeing high nominal wages, and you're starting to see real wages are now positive by most measures. So I think overall households are in good shape. Surveys are a different thing. So surveys are showing dissatisfaction. And I think a lot of that is just people hate inflation, hate it. And that causes people to say the economy is terrible, but at the same time, they're spending money. Their behavior is not exactly what you would expect from the surveys. That's kind of a guess at what the answer might be. But I think there's a lot of good things happening on household balance sheets, and certainly in the labor market and with wages. The biggest wage increases having gone to relatively low wage jobs. And now inflation coming down, you're seeing real wages, which is a good thing. Thanks very much.
And let me welcome you to Closing Bell. I'm Scott Wapner, live today in San Francisco. That was the Fed chair, of course, following what many described as a hawkish pause by the central bank. No increase in rates, but the outlook, which the markets were waiting for, shows holding them higher and more restrictive and keeping them longer there than perhaps anticipated. And with that, fewer cuts than the market has priced in for next year as well, perhaps because they also raised their economic outlook for next year, which Chair Powell talked about. He said, quote, the economy remains robust, GDP growth higher than expected, labor market, he says, still tight but coming more into balance. He also said, this was interesting, at least 5 times, perhaps even more than that they will, quote, proceed carefully, but would raise rates again if necessary. He said, based on the outlook, it was, quote, more likely than not that they'll raise at one of the 2 remaining meetings. Also wouldn't call a soft landing a baseline scenario, but that it was still possible. He did call it the primary objective. Joining me now to discuss all of this and what happens in the markets now is a CNBC exclusive interview. It's Double Line's Jeffrey Dunlop with us as always, as he always is on Fed Day. Jeffrey, welcome. It's good to talk to you today.
Nice to be back again, Scott.
Yep. What's your big
press
takeaway?
Conference today.
Yeah, it sure was.
You nailed it.
What is your takeaway from it?
You nailed it with your intro. That's what I was going to say. The word of the day is carefully. He has said it 2 or 3 times in his prepared statement, and he said it many, many times in the Q&A. I think there was something in there for everybody. I think this is really one of the best Fed decisions that we've had in a while. I think that carefully concept is wrapped around the idea that we've raised rates 525 basis points. He pointed that out in his statement. We continue to do QT. With Stephanie Link, I think prior to the Fed decision, I think correctly pointed out, doesn't get enough play, that QT continues to happen. So, they did upgrade the forecasts for next year. Unemployment not as bad. Economy a little bit stronger. So I think he's right about all this. I think that it's the right thing to not raise rates. I think it's the right thing to wait. We have a lot of indicators that are looking at softness. A lot of people are making a big deal about the consumer resiliency. I think a lot of that's due to high prices. And you see that in credit card gains. There was a big drawdown a couple months ago, but it's back up. So we see a lot of debt in the economy. And another problem with the economy is there's been so much increase in interest rates for the Federal Reserve and the Treasury Department. In other words, the interest on the debt is really going up a lot. And it's going to go up every month that rates stay at this 5.25 to 5.5 level, and obviously go up faster if they do another hike or 2, which they're certainly contemplating or have the door open to. We've already had hundreds of billions of dollars of increased interest expense, and it's going to go up a lot more with these interest rate levels, and it's creating a lot of bond supply. And the bond supply has been one of the reasons interest rates have been going up, in addition with the quantitative tightening. The good news, I guess, on interest rates is at least taxes are going to get paid here in California on October 15th. One of the reasons the deficit is so big is there's been deferral of tax payments. That's going to go away. In fact, it's going to get a lot worse because here in California, we're going to have to pay 2 years worth of taxes unless they change the rules for the 2023 tax payment and push that forward from April 15th. We'll have October 15th, 2023 and April 15th of 2024. That's 2 years worth of taxes paid in 6 months. And I know that some people, are prudent and plan for that. I know I have. But a lot of people, they adjust their lifestyles. And that has to do also with a headwind on the student loan payback. because we know a lot of people, when they weren't paying their student loans, they spent the same amount of money, or they borrowed money, they paid the same amount of interest by ramping up their credit cards. And that's certainly been the case. So we have a lot of cross currents right now in the economy. I kind of see it in a transition, and the data is extremely non-reliable right now because all of these distortions from the government money, and now the payback of, and now the drawdown in those excess savings, now the payback of loans, and now we have these strikes showing up. So we have cross currents regarding the inflation situation that it makes it very prudent for the Fed to have a wait-and-see attitude. These strikes are obviously inflationary. The percent since June is obviously inflationary, right? So all these things are happening, but at the same time, the shelter component of the CPI is definitely coming down. The owner's equivalent rent lags badly. If you look at the Zillow and apartment list rent roll indices, they lead the owner's equivalent rent, or the shelter component, by about a year, and they're basically flat year over year. So a lot of cross currents going on, and it's absolutely appropriate to wait and see for the data. So they did the right thing.
You know, Chair Powell said, based on the outlook, that it was, quote, more likely than not, as I've already said, that they'll raise at one of the two remaining meetings. You made the case repeatedly recently, including just last week, a few hundred miles down the coast from here with me, that you thought the Fed's done. Do you still maintain that view, that they are finished raising interest rates?
I think the probability of rate hikes is higher than what I thought before this oil spike happened. The oil spike is really going to be problematic. We already know that the base effects, the roll-off of the CPI, is going to lead to, very likely, inflation going back up. Kind of staying where it is now in a sticky way, maybe even going to a 4 handle on the headline CPI before it comes down with that shelter component effect. And so I think the chance of a rate hike is higher because these oil prices are going to be a real problem. My gasoline station, over the past few months, the price has gone, I get Supreme gas, 91 octane. It's gone from $5.50 to $7 a gallon already in just the past a few weeks, and that's not going to go down with West Texas Intermediate above 90. So those things lead to a little bit of a headwind against the idea that the Fed can cut rates or stay on hold. And I think that's appropriate that the Fed sort of downgraded the so-called rate cuts because of this these cross currents of inflation. So I do think there's a better probability that we'll get a rate hike than I thought, say, 2 months ago. Steve
Leisman, of course, was in the room, asked a question to the chair, as he always does. He's stepped out now and is going to join our conversation. You know, Steve, I want to hone in on an issue that you raised earlier, and a point that you underscored in your question with the chair, as asking why a more restrictive real rate next year than this, to which he was explicit, where he said, because of the stronger economy. And I just want your perspective, because what I feel is now interesting to talk about is, it seems to me that the chair's biggest problem now is not where inflation is, it's where the economy is. And he is afraid that because the economy is, as he said, much stronger than they thought it would be, that inflation is going to come back. He doesn't trust necessarily that it's going to remain on the trajectory that it's been.
Yeah, I mean, Scott, let me just point out from the Vulcan mind melding department that is the exact quote that I brought to you here, was his answer to that question. So I'm going to let Chair Powell say what he said and answer the question. And if you don't mind, I'll comment on the back end of that.
Rather than pointing to a sense of inflation having become more persistent, I wouldn't think that's not, we've seen inflation be more persistent over the course of the past year, but I wouldn't say that's something that's appeared in the recent data. It's more about stronger economic activity.
Now, just to understand what he was answering, the question is, he even surprised me. I was on Scott's show earlier today saying, I think higher for longer is going to be what we're going to hear today. But it surprised me that from a real rate perspective, take the Fed's inflation forecast, take their funds rate forecast for next year, the Fed becomes relatively more restrictive next year. I thought maybe it would pivot a little bit higher, but in fact, what happened is they kept the inflation rate the same, but they added a half a point or took away a half a point of rate cuts that they had previously penciled in. And Scott is right. I think the stronger economic growth is part of it. I think there's also a persistence to the service side of inflation that may be a part of it. But look, here's the thing. Even though the forecast, Scott, is one that is relatively more hawkish, the overall forecast is more bullish when it comes to GDP, when it comes to unemployment. And I think I take Powell at his word that he's going to be careful in getting there. Just because you have a plan, even sometimes, Scott, if that plan is a little reckless, doesn't mean they're going to execute it. So the idea that they're going more slowly should give you a little comfort, even if the direction of travel is one that is ultimately more hawkish.
I was going to ask you that, too. The idea of those words, proceed carefully. As I noted at the outset, I counted at least 5. It's probably a couple more. Jeffrey himself raised it very much at the top. Do you want to just opine on that? Why he felt it so necessary to underscore those words?
Well, I think the reason is because, look, he did an awful lot of work. 500 basis points is a very historically aggressive rate hike cycle. He's gotten through it to a point where there's not obviously going to be a recession at this point. He has a chance to stick a soft landing, and he now has the luxury to take a little bit more time. I think the idea of a pause this month made a lot of sense. It may be they pause again. In fact, Scott, if you look at the probabilities, I'm sorry, I haven't looked at it since I came out of, since the 2 o'clock announcement, but it was higher for December. So they pushed it ahead. They said, so you know what? I think November is likely to be a pause. And it's not even at the 50%. So Jeff could be exactly right. They are done with somewhat higher probabilities that they're not. But the odds on call right now is that they are done. And the focus now is this how high for how long. Today we learned longer, but I think Powell's also saying, you know what? If I don't have to be, maybe I will take some back.
Yeah, good stuff. Steve, I appreciate it very much. That's Steve Leisman, our senior economics reporter down in Washington on the backside of the Fed Chair's news conference. Back to Jeffrey Gundlach, who's clearly still with us, too. Jeffrey, your reaction to that, what Steve Leisman had to say about, the economy being sort of, this too strong economy in some respects being an issue for the Fed Chair?
He really bought himself some time in a very clever way, Jay Powell did, I think. He basically said we're mindful of economic strength that, like GDP now it's pretty high at the Atlanta Fed. It's got downgraded recently, but it's still, I think, in the 4s, maybe the high 4s. So it's a hat tip to that. They do the clever thing of buying themselves time. They make a forecast for, the future, 6 months from now, 18 months from now, and they leave rates unchanged because they're cognizant, rightly so, of the potential for all of the accumulation of this tightening between the 525 on the Fed funds rate and the quantitative tightening to date. I'm going to go back to the old shadow Fed statistics, where there was a study done where they said if we didn't do this quantitative easing, quantitative tightening, if all we did to manipulate monetary conditions and looseness and tightening was the Fed funds rate, where would the Fed funds rate have to be to equate to the Fed funds rate tightening of 525 plus the QT? So if we didn't do the QT, this study shows that they've raised rates. They would have had to raise the Fed funds rate by 730 basis points is what they've effectively raised the Fed funds rate. That's a lot of tightening. And the Fed needs to realize, and of course Jay Powell said so explicitly, that the QT is continuing. So those rate hikes really are not rate hikes, but it's tightening of monetary conditions. That's going to go up to 800 basis points. So it's very clever to say we're respecting the potential for less of an increase in the unemployment rate, but at the same time, we are going to buy ourselves time. Really good stuff. I think it was an excellent way to handle this meeting. I agree with Steve completely that I think the narrative is going to develop that there's going to be no rate hike in November because they need more data. They need more data, maybe December. But the other thing I want to tell the listeners about, this is really an interesting thing. I always talk about the yield curve being inverted as a warning signal, if you will, puts you on watch that a recession might be coming, but it doesn't happen imminently. It takes time. And so it's usually about 14 months to maybe 18 months after the 2s, 10s inverts that you start getting a recession. Well, that was last October, so we're coming on a year. on that one. And one way to track this, the best way, one of my investors sent me a note the other day that I found very interesting. Just look at the 30-week moving average of the 2s-10s spread. When the yield curve de-inverts by crossing back above its 30-week moving average, that's a really strong signal of a recession. And that's very close to happening. Also, the unemployment rate is now up by 40 basis points off of its low. It's probably going to go higher, in my opinion. And so with that, you're going to get a crossover on the unemployment rate. And also, the unemployment rate is going to cross over its 3-year moving average in the first quarter of next year by our assessment. These are really strong recessionary indicators. So it's starting to pile up. I think that the problem that we have, government shutdown looming, student loans being paid back, taxes being paid, I think the economy could slow down fairly quickly once we get in the next, say, 4 to 6 months.
But all that said, did bonds just become more attractive today? Because we think that, especially on the short end, you see that the 2-year is obviously up. Stocks, by the way, are at the lows of the session at this very moment. But if we think that, rates on the short end are going to continue to rise for a bit before perhaps, if your projection comes true and the economy weakens and then theoretically rates would go down, did bonds just get more attractive to you?
I think Treasury bonds are attractive. I find them quite attractive at this moment. Not for the long term, though, Judge. It's really for the short term on economic gyrations, which I think are going to be weaker economy and probably weaker inflation than people are forecasting. But the problem is the long term for interest rates is getting increasingly unattractive because we have all of this interest expense that's piling up. And the deficit's already at 8% of GDP. And under a certain scenario that's not a very pretty one, you could go to 12% of GDP on the deficit. That's a ton of bonds. And so we have two really long-term secular indicators that turned twice in my career. The first time they turned was in the early 80s. And that's nominal GDP, a 7-year moving average of nominal GDP, peaked in the early 80s and fell for 40 years. So that has turned up it formed a bottom between 2016 and 2020. And that's a interesting indicator. Also, the core PCE 7-year moving average has exactly the same look. Peaked in 1980, bottomed around 2020. That's also going up. And so that suggests to me that the next bond rally, which will come in a Pavlovian response to recessionary conditions, will not last. I think that the response to the next recession will be the same response that we've had in the last 20 years, and that's slashing interest rates and then probably quantitative easing. And this will be an inflationary policy. The deficit is going to get so bad in the next recession that we're going to have radical policy changes. Just like the elections of the presidency keep getting wackier every 4 years, the responses by the Treasury Department and the Federal Reserve need to be more extreme all the time because the debt acts as a tractor pull. And I'm afraid that in the next recession we'll get a bond rally that doesn't stick because the response is going to have to be inflationary. So we're in sort of the eye of the hurricane situation relative to the general trend, I think, in bond yields. For the time being, though, when you have to think about managing money actively, which of course we do every day, we have to respect the fact that we think we're looking at a bond rally. Even the 10-year Treasury yield is basically double topped from where it was a year ago. It's made us a minor new high, but I think we're getting near the end of this rate rise on the 10-year.
Well, speaking of slashing rates, we learned from the outlook that we're, going to get 2 fewer cuts coming next year, at least based on the outlook, which, isn't worth much more than the piece of paper because it's not a prediction. It's just obviously an outlook. But you've been looking for cuts. Yeah, you've been looking for cuts next year. I mean, are you rethinking your outlook for rate cuts based on what the outlook today said?
Not at all. I think it's quite likely there's going to be rate cuts in the first half of next year, and I think they're going to be bigger than the Fed thinks as their base case. So I think we have real rally potential in the long in the bond market. So the way you positioned, Judge, is really pretty simple. It's the same that I've been advocating now for a while. You want that profit potential at the long end of the Treasury market to help hedge your risk positions. But where you really want to be in bonds is not T-bill and chill, which is the new rhyming phrase that people use about investment strategy, because you can buy the 6-month bill at $5.50. But I wouldn't do that. I would go more into a 2 to 3 year type of portfolio in credit, where you can get 7.5%, 8.5%, 9% yields. I mean, bank loans in the double B sector, they have yields that are up in the high single digits. And the Fed not cutting anytime soon means you're going to earn that yield for a while. So this is a market where you want a long-term position, kind of a core position in treasuries for a fixed income portfolio. And then you want 2 and 3 year, because that's the peak of the curve, the 2 and 3 year in the securitized credit markets, where you get these big yields. And so you can end up with a pretty sleep at night type of portfolio that throws off income that's probably triple, if not 3.5 times that of the equity market. The equity market is really overvalued versus the bond market based upon risk premiums and stuff like that. Back a year and 3 quarters ago, bonds were stupidly overvalued, and as rich as stocks were when they began that bear market, they were cheap to bonds. That's changed by a factor of 4. So you've gone from bonds were doubly rich to stocks, now bonds are doubly cheap to stocks. So it's been a 4x shift, and I think that should be respected in portfolios. So I think 25% long-term treasuries, 25% not in cash, but in this short-term, not terribly low in credit, but not pristine credit stuff. And then you want 25% in stocks. At this point, I think there might be a case for building a position in commodities, which have moved above their 200-day moving average in a way that's becoming quite convincing. It's mostly energy, but it seems to me that there's momentum behind this move in the commodity sector.
So it's you read my mind. I was going to ask you how you would break up 100% into which holdings to have. But let me end then. If you think that it's worthy of having a 25%, let's just say, in commodities, you assume you must then that what has been dollar strength is going to turn into dollar weakness as the economy itself weakens?
Yes, I think that for sure the dollar is going to weaken in the next rollover of the economy. It's going to weaken pretty mightily, I think. And that's one of the problems that the bond market's going to have too. So I think that's going to happen. What's happened recently is we've had dollar strength recently, and that's been a little bit at odds with real interest rates, frankly. Not at odds with real interest rates, but at odds with sort of financial conditions broadly, I think, with the deficit. But that's going to change.
Jeffrey, I appreciate it, as always. It's a good Fed day when we have you on the backside of Powell. I appreciate it so much. We will see you after the next meeting. I'm sure of that.
Okay, sounds good, Judge. Good luck, everybody.
Right. Yep, you be well. That's Jeffrey Gundlach, of course, with Double Line, who joins us every Fed day right when the Fed chair is done with his news conference, and you'll hear that again after the next meeting. Let's get to our results of our question of the day. We asked, how many times will the Fed cut rates next year? The majority of you said less than 2. Maybe that changed a bit. Maybe that. After the outlook today from the Fed. Coming up next, SoFi's Liz Young. She joins me here on set at One Market. We'll get her first reaction to the decision. Plus, we are getting you set up for earnings in overtime, a rundown of what to watch when FedEx's numbers, they'll hit the tape in just a few moments from now. We're about 14 or so minutes away from overtime. All that and much more. We're going to take you inside the market zone next.
In today's video, we're looking at the single easiest way to scalp it.
Giám đốc điều hành công ty cổ phiếu NTV Financial Group trực tiếp trao đổi. Với chỉ tiêu 30% tiền lời mỗi năm, quý vị sẽ được chia tiền lời mỗi 3 tháng với số vốn đầu tư tối thiểu 5.000 Mỹ Kim. Quý vị sẽ được công ty bảo đảm 100% không bị mất vốn và có thể rút vốn về bất cứ lúc nào. Xin liên lạc trực tiếp với Trish Thùy Linh tại 949 524 9352 hoặc gọi về công ty 714 251 6036 để tham khảo.
No news is bad news. Có tin tức là ok. As long có tin tức xấu hoặc là tốt là tùy theo cái phản ứng của mỗi một cá nhân của chúng ta. Cũng như là tuần trước chúng tôi đã nói rồi, rất là dễ dàng khi mà một cái bad news nó ra mà thị trường nó let down, cái đó là buying opportunity cho quý vị. Và chúng tôi hầu như là 99.9% tôi đã cam đoan là thị trường nó sẽ pop back, mà pop back rất là mạnh chứ không phải nhẹ bình thường, thưa quý vị. Đi ngược lại Snapchat mà đang short sale Snapchat phải cover right now. Before the Snapchat nó sẽ gap up trên 14-15 đô và nó sẽ lên tới 21 đô rất là cấp thời. Và đây là những vấn đề quan trọng mà chúng ta thấy về vấn đề mà thị trường phản ứng như thế nào.
Dạ, cảm ơn anh Vũ. Cho cái quỹ NTLF Fund của chúng ta, vậy không biết là cái đó là cái strategy gì của anh và cái đó là cái trick gì anh có thể chia sẻ?
Thưa quý vị, NTV không bao giờ biết sợ cho vấn đề mà cổ phiếu. Tại sao? Tại vì nếu mà tôi quản lý tài khoản của quý vị mà luôn cả tài khoản chung của tất cả mọi người mà tôi sợ thì quý vị sẽ thất bại rất là nhiều. Không sợ và không tham, đó là cái vấn đề rất là nghiêm trọng trong vấn đề mà mua bán cổ phiếu. Snapchat chúng tôi đã predict trước cái earning của Snapchat nó đã là bad rồi. Nhưng mà ngay cái thời điểm rất là nhiều người đang try to short sell cái stock. Cho nên họ cố gắng đẩy cái stock xuống để làm gì? Để mà thử cái bao đồng. Và nhìn vào cái technical charting, chúng tôi đã thấy rằng đây là cái tour leg. Trong vòng 10 ngày, Snapchat sẽ bung lại. Và cái cổ quyết 10 ngày và cái nguyên tắc 10 ngày của chúng tôi là một cái sole proprietor system mà chính cá nhân tôi develop ra. Và tôi một ngày nào đó khi mà hết contract với một cái tổ chức nào về cái provider này thì tôi sẽ viết một cuốn sách để mà chỉ dẫn rất là rõ ràng cho thị trường của Việt Nam và Mỹ nói chung cách handle cái 10 ngày. 10 ngày là cái gì? Tại sao 10 ngày nó khá quan trọng? Và tại sao 10 ngày nó có thể thay đổi vận mệnh của cả một portfolio của quý vị? Và đó là điều quan trọng chúng tôi sẽ làm tương lai.
Yeah. Chúng ta can't wait for cái cuốn sách đó, tại vì cái đó là cái giống như là một cái bí mật gia truyền mà vẫn chưa được tiết lộ. Câu hỏi kế tiếp Thùy Linh sẽ hỏi anh Vũ để anh Vũ chia sẻ với chúng ta làm sao để biết được khi mà cổ phiếu đang rớt thì làm sao để biết cái signal nào cho chúng ta biết là nó sẽ quay đầu lên hay nó sẽ vẫn tiếp tục đi xuống. Thì đây là cũng như là một cái bí mật mà anh Vũ sẽ bật mí với chúng ta ngày hôm nay là tại sao, và chúng ta để cho những người nào mà trade ở nhà cũng như muốn tìm hiểu thêm thì sẽ biết thêm được cái câu trả lời này. Yeah.
Ok, cảm ơn Thùy Linh đã hỏi câu hỏi này. Và kính thưa quý vị, cái quan trọng nhất của cái stock mà khi mà nó rớt xuống mà mình biết nó đi lên hay đi xuống không, quý vị sẽ không biết liền trong ngày đó. Quý vị chỉ biết được trong 10 ngày mà thôi. Và tại sao cái công thức 10 ngày này tôi đã nói trước nó rất là quan trọng. Để trong 10 ngày này đó nó sẽ tạo ra một cái healing, một cái sự healing trên cái stock. Nó sẽ làm cho cái người bán xuống nó quên đi và người lỗ đã lỗ cũng quên đi rồi. Trong cái 10 ngày đó stock nó sẽ nhấp lên nhấp xuống không phải một lần, ít nhất là 3 lần. Có nghĩa là khi mà một cái stock nó đi từ 20 đô, thí dụ vậy, mà nó xuống tới 15 đô trong vòng một ngày thì nó sẽ nhấp ngược lại khoảng 17, nó xuống lại khoảng 15, nó nhấp lại 17. Nó sẽ create nguyên một cái parent leg down cho quý vị. Và trước khi nó lên cái ngày cuối cùng nó sẽ leg down rất là mạnh. Tại sao? Nếu mà nó leg down rất là mạnh trong ngày cuối cùng và nó reversal trong ngày đó, đó là ngày thứ 9. Và ngày thứ 9 mà nó làm điều đó có nghĩa là ngày thứ 10 nó chuẩn bị nó on the upside. Còn nếu mà ngày thứ 9 mà nó leg up có nghĩa là trước khi đó một ngày volume rất là thin, nó bắn cái stock lên một cái, quý vị chuẩn bị cho một cái đà nữa đi xuống. Cho nên đây là những cái mà fundamentally hầu như là nó sẽ xài được 99.9%. Nếu quý vị nào mà chụp được những lời tôi nói đó thì quý vị phải theo dõi cái cổ phiếu đó rất là quan trọng. Thí dụ như Snapchat cũng vậy. Trong 10 ngày Snapchat create 4 cái bottom và cái final bottom nó leg down. Quý vị biết nó leg down thì tới bao nhiêu không? Tới gần 10 đồng, gần như là sát cái 10 đồng mà một share. Để làm gì? Để mà qua ngày sau nó bật ngược lại và nó đi ngược lại và lên qua khỏi 11 đồng. Ngày hôm nay close trên 12 đồng. Và đây là điều quan trọng trong vấn đề trading. Cho nên chúng ta lúc nào cũng nhớ rằng cái 10 ngày nó absolutely nó là một cái tiêu biểu quan trọng nhất trong cái vấn đề mà trading. Tôi đang có một cái pattern pending
cho cái 10 days trading rule của chúng tôi, và có rất là nhiều tổ chức họ muốn interview tôi, nhất là những cái software automate mà để mà trading, họ muốn dùng cái 10 ngày đó của chúng tôi để mà họ embed vào cái algorithm của trading của họ để họ make a lot of money. Chúng tôi đang có hệ thống và đang có người partner, họ đang working on cái vấn đề mà deploy cái đó ra thành một cái automate software. Nhưng mà điều đó không có gì mà quan trọng cả, thưa quý vị. Cái quan trọng là mặc dù vậy trong cái 10 ngày đó mình cũng phải theo dõi rất là kỹ lưỡng. Tại vì sao? Tại vì chỉ trên một cái tích tắc thôi, cái ngày cuối cùng, ngày thứ 9 nó tích tắc thôi, nó sẽ quyết định quý vị đi lên hoặc là đi xuống. Cái vận mạng của quý vị đi ngược chiều là chỉ ngược chiều ngày thứ 9, cho nên đến ngày thứ 10 là mình thấy chết rồi. Tại sao? Tại vì nếu mà nó leg down ngày thứ 9 á, là nó leg xuống á, thì ngày thứ 10 nó sẽ gap up, có nghĩa là nó leave một cái gap cho quý vị và nó đi lên. Còn nếu nó đánh lên ngày thứ 9 á, thì ngày thứ 10 nó sẽ gap down. Mà khi mà nó gap down, quý vị không có cơ hội để mà đi ra nữa. Mà nó break new low rồi thì nó cứ continue to go down until một cái ngày đẹp trời nào đó nó ngừng lại thôi, mà thường sẽ là 10 ngày nữa. Đó là cái vấn đề quan trọng của vấn đề trading. Khi mà mình biết cái stock nó xuống tới đó và nó có rebound lại hay không, hay là nó continue, hay là tiếp tục đi xuống nữa, đó là cái mà quý vị phải nhận định. Có một số tài khoản mà đã trade với tôi, cái tài khoản mà 50.000 đó, thưa quý vị, tôi trade rất là nhiều người gọi tôi quá sợ. Tại vì sao? Làm sao mà cái cổ phiếu nó cái tài khoản nó đi từ 50.000 mà xuống còn có 35.000 trong vòng 7-8 ngày, thì tôi vẫn cười thôi đó quý vị à. Nếu mà quý vị có thể đợi cho tôi khoảng 10 ngày thôi thì nó có thể trở ngược lại. Thì họ cứ hỏi tôi tại sao cứ 10 ngày hoài vậy, chỉ có 10 ngày, tại sao anh có 10 ngày. Thì thưa quý vị, hôm nay là ngày thứ 3 rồi trong 10 ngày đó, và trong ngày thứ 3 của 10 ngày đó, cái tài khoản của quý vị nó đã trở lại và nó đã bít luôn cái 50.000, nó đã trở lên tới 55.000 rồi không quý vị. Rất là nhiều người hồi hôm qua đã break even trong vòng mấy ngày thôi. Thì hỏi tôi tại sao anh làm được điều đó, mà sao anh biết được điều đó. Thật sự ra cái swing đó nó expected trong cái hệ thống của mình và nó đã xảy ra. Tôi continue nhận rất là nhiều cái tài khoản mà personal, mặc dù những tài khoản personal đó vẫn cần một người mà represent để mà họ handle cái account đó. Cho nên quý vị nếu mà cần một người mà giúp quý vị mở cái account 50.000 đó để mà tôi personally trade cái account đó của quý vị đó, thì quý vị phải liên lạc với một người account executive của tôi, đó là Linh. Thì Linh sẽ hướng dẫn cách mở account e-trade, TDM trade, vân vân, những cái chỗ đó để mà quý vị có một cái tài khoản riêng biệt cho tên của quý vị, và tôi sẽ đại diện để mà trade cái điều đó cho quý vị.